Bitcoin is starting to get on people's nerves. When's this move to the downside going to stop? Now, it all depends on your perspective. It's another way to get Bitcoin cheaper if you are a holder. If you're a day trader, you're taking advantage of that rise, retrace, continuation to the downside. In today's video, I'm going to give you a heads up on what to expect going into the New York session. It is Friday, yeah. Now, forget that. But more importantly, we're going to be focusing on key levels when the New York session opens. We have news coming out today, which is the preliminary consumer sentiment, and it's quite laughable given that they're going to do a survey based on the opinion of 500 consumers on where they think inflation is heading. Now, if these 500 people think that inflation is going up, inflation's going up. 500 people? Let's have a conversation. So for my holders, we can see that Bitcoin has broken that critical 800 EMA zone. This area I was always focusing on. I wanted to see if Bitcoin could prove its worth at the 800 EMA because it sits around the confluence of the 50 EMA, which is this blue line right here. Now, the 800 EMA sits on this zone right here, as you can see, 27,640-ish, all right? If they did break that zone, Bitcoin would flush through to the downside, and this is what we are witnessing right now. Momentum is picking up, so just be careful. Now, some of you that might be doing DCA might see this as an opportunity to pick up Bitcoin cheaper, all right? But what we need to do is we need to scope the map. Have a look at what we have down here. This is another vector candle region. Now, this is a zone where the market maker had initiated the trap to get retail traders to believe that price was dropping down. He then instantly reverses it back up. Now, this strategy that I'm going to show you now, the V-shaped play, came into fruition, or it's starting to play out based on what we spoke about yesterday. If we go to yesterday's live stream, you can see we were talking about Bitcoin coming down to initiate a reversal back up. As we can see right now, Bitcoin is not really giving us that flavor just yet because we are still in the process of price dropping to the downside. As you can see, it's going down. How low will Bitcoin go? Well, what we may see is the following. Bitcoin right now has pulled away from the 1 hour 50 EMA zone, and we have this imbalance right here. This is where the moving averages are starting to fan out. That would suggest to us that Bitcoin has got momentum to the downside, and there is going to be a climatic point in the chart where there will be a reversal. How long the reversal will last for is a different story, and this is what the V-shaped play is. The V-shaped play suggests that when price comes back down, it will then instantly reverse back up because it's the market maker's attempt at trapping retail traders short to then instantly reverse it back up again, okay? I want to draw your attention to a little bit of a trick, okay, in projecting the journey of price. And then we're going to go into the chart right now and then try and do that for today's session and then going into the weekend. In front of you was my projection that I sent to the patrons of the channel, and I do this every Saturday, and it's a weekly outlook on Bitcoin, all right? We have projected that Bitcoin would land around the 26,500 zone. This was the FOMC, and what I had anticipated was Bitcoin was going to initiate a move to the upside to take the liquidity of these $4.9 billion worth of short liquidations. Now, when we actually go into the short liquidations chart itself, at the time of the FOMC, there was no liquidity. They had removed the liquidity, so retail traders were taking their money off the table. And that's why we didn't get the initial attack to the upside and go beyond the 31,000 zone. So market maker could see that there was more commitment to the downside, which then led Bitcoin from this range right here to start rolling over. So here's a strategy that we use in the hybrid system. Last night, I projected to the patrons of the channel that Bitcoin was getting ready to roll over. Why? Let me draw your attention to these two zones. The first zone shows a collection of green vector candles appearing above the key 27,000 zone. We also had a green vector candle down at the lows, so my awareness already, I'm anticipating that Bitcoin may come down and eat this liquidity. Now, let's just take into consideration what Bitcoin has been doing throughout the past week. It has been dropping down. So any waves of price moving lower will be met with a retrace back up to initiate the continuation back down again. These are the clues that Mr. Market Maker gives to help you understand the behavior of what he's trying to achieve. So when we look at these green vector candles in this area, we can see that Mr. Market Maker is carefully spiking price up all around the key 27,000 zone. What is he doing? He's building shorts at the highest possible point within this range. Here is another example where I don't look too optimistic. Well, I kind of look like I'm stoned. But anyway, that's another story. Here we have the 27,500 zone. Again, the same story with whole numbers is the same with half numbers. You can see in this area, Bitcoin started to show some interest by the market maker by spiking price back up to take away the liquidation points for the retail trader in these red vector candle zones. Now, going back into the 1 minute time frame from the previous structure that we just saw around the 27,000 zone, you can see the attempts by market maker. Stop run 1, stop run 2, stop run 3, stop run 4. If you remember in the live stream how we spoke about the strategies regarding the 50 EMA, the 200 EMA, and the 800 EMA, this is the same story. Price was staying below the 800 EMA throughout this whole journey of consolidation by Mr. Market Maker. The green vector candle down at the lows was the clue for me to be aware that Mr. Market Maker is in preparation to start working price lower because there is liquidity down at the lows by retail who ain't paying himself. And then you can see the market maker rips price to the downside. So we understand the idea about whole and half numbers, and their importance is where Mr. Market Maker gets his shorts at the highest possible point and he gets his longs at the lowest possible point. Right now, it appears that Bitcoin is in a cyclical formation to the downside. So what does that mean? Well, if you remember, back in the day, we would do the following. We go W formation, rise up, retrace level 1, rise, retrace level 2, rise, retrace level 3, peak formation, drop level 1, drop level 2, drop level 3, peak formation. Okay? I challenge you to try and say that at speed. So where are we? Well, right now, we are in essence in this zone right here, and that is based on the daily time frame. So if we go back to the daily time frame and put 2 and 2 together, we can see that Bitcoin right now is forming what appears to be the M formation at the highs. So we expect the drop, which is what we're getting, and now we're anticipating a little bit of a retrace to form level 1 to then make another attempt to the downside to achieve the level 2 drop to the downside, okay? Now, remember, Bitcoin can just do whatever it wants, and this logic of the cycle can extend price as far as it wants. We use the cycle as a means to understand how the market maker can structure the charts or structure his behavior, okay? Now, we go back into the 1 hour time frame and we put 2 and 2 together and we say to ourselves, okay, what can we expect from Bitcoin inside of this zone right now? Well, the principle does say, and you hear me say it all the time, make sure that you are fully aware of where the 50 EMA is on the 1 hour time frame. So we've got the 1 hour time frame right here and we've got the 50 EMA right there. Bitcoin has yet to test its daily open. Now, if Bitcoin had the chance to continue lower, it would probably go lower. But we've just had a green vector candle zone right here. That's important because that tells me that market maker has been forcing price down, but he's put the stop on the brakes. He says, whoa, calm down, hold on. We've got enough traders trapped in this zone. We need to consolidate. We need to try and make a return on our investment because Mr. Market Maker has been going long in this candle right here. He's been going long in this candle right here. You see how he come back up and recovered some of that candlestick? He took his money and he left. Now, that's exactly the same thing that is happening right now. And it's all happening in and around between the 26,500 zone and, of course, the 26,000 zone itself. So we're now trying to understand if Mr. Market Maker is going to mark price back up. Is he going to bring price back up into this zone and repeat the same process as he did in this area right here? Look at what he did around the 28,000 zone. Whole and half number principle. He built his shorts at the highest possible point. Stopping volume candle right there. This little red candlestick right here. I'll show you. Happy days. He initiates the trap. He stops price from continuing higher, not because there's an 800 EMA there or a 200 EMA. That's what we use. That's what you use as a retail trader to understand where momentum is. But market maker isn't interested in that. He's only interested in what you do at that point. He stops the volume in that area. The algorithm triggers and reverses price and comes down because the order book is suggesting that there are a lot of traders that are trapped in longs here or in long positions and they've got liquidation points down below. So market maker gives them the chance to just realize a little bit of a return. That's why I say pay yourselves as soon as you can. Take the money and run. We use the moving averages as a means to understand how retail will react. Think like a market maker. Your trading will change. It might not change overnight, but when you go back in the charts and recognize these sort of structures that happen, how price behaves around whole and half numbers, by the utility of the hybrid system, stopping volume candles, green vector candles pushing price up but not going anywhere. We then go into the chart right now and we make the assumption that Bitcoin hasn't tested its daily open. Bitcoin has reverted back away from the moving average. We would naturally expect that even though price has moved away from the moving average, we would anticipate Bitcoin to try and find some stance to come back up. If it doesn't, and this is all they wanted to do, then that's what they will do. You will then go into the smaller timeframes to understand that behavior. Look at where price is right now. It's sat at the 50 EMA on the 5-minute time frame. This is where price is stagnant. Now what are we waiting for? We are waiting for the collection of green and blue vector candles to appear inside of this zone. We've already had one green vector and a couple of blue vector candles, suggesting that market maker may have found the low for this zone right now. We have a vector candle point right here, which is where market maker can get his liquidity back from going long in this area. Because if the yields are inverted, then that would mean investors are favoring short-term returns. So they want their money exposed, but they want to take it out as soon as they can. The same goes for Mr. Market Maker, okay? Because if he wanted to mark price down even more and go and send price to the downside, he will get his money back from here and then he will mark price down again. Because he knows that he can attack the traders' liquidity, especially down since last night where they took out nearly $3.7 billion worth of long liquidations. We even go into the actual monthly time frame on the high block and we can see that there's even more liquidity down below. As you can see, last night, what did they take? Ouch, just $23 billion worth of long liquidations. Why aren't they paying themselves? That money was there. Why are not people taking the money? It's frustrating. It pisses me off, but that's another story. Anyway, going back into the chart, the logic says that as long as price is at the 50 EMA on the 5-minute time frame, you do nothing. You are waiting for the first bout of volatility to move away from it. If you're going to favor longs and see price come back into this zone right here, and hypothetically Bitcoin coming back up to test the daily open, what you need to be mindful of is green vector candles need to appear inside of this zone. They mark price up. We can see the 26,500 zone. Be careful that they don't spike above this zone and start showing green vector candles in this area that are quite spiky. In other words, similar to what they did on the 1-minute time frame last night. Right here. You see that? We are now at and heading towards the 26,500 zone. You want to make sure that they're not doing this behavior around the whole and half number zones. That's important because that would be market maker setting up the trader for the trap to reverse in the opposite direction. So back onto the 1-minute time frame, we look closer and we see how is Bitcoin faring? Well, what we've got is market maker pulling this behavior around the 26,362 zone. I'm not going to pay attention to this, but I am seeing that they are trying to mark price back up again. So a volatile move to the upside to finalize the liquidity on this side right here, maybe on the cards for Bitcoin. So just keep an eye out on that bad boy right there. So hopefully that can put things into perspective for you about trading the whole and half numbers. Remember, if price is hovering around a half number or a whole number, whether it be 27,000, 26,500 or 26,000, pay attention to how the vector candles are behaving in those zones. Ask yourself the question, if you see green and blue vector candles pushing price up, but price is not moving away or too far from the key 26,500 or the 26,000 zone or whatever whole and half number zone you're looking at, if you're not seeing the conviction of them marking price higher, then you are probably getting prepared for a move in the opposite direction. Play around with it. Go back in the charts. Look at how Bitcoin behaves around the 30K zone. Look how it behaves around the 30,500. Look how it behaves around the 21,500. Go and mark these points off in the chart over the weekend and just pay attention to how they hold price above those zones and how they hold them below those zones to try and come back up. If you are new to the channel, make sure you hit the like button and subscribe. I want you guys to go and have a great weekend. Please be light with your trading, and I got nothing but love for you all. Take care of yourselves, gang. Mad love. Peace.